And we are officially live only on onedealaway.com, broadcasting every morning at 7 a.m. Eastern Daylight Time. This is Money Matters. My name is Nev. Today is Thursday, August 27th. And of course, on Thursdays, we talk about real estate. So if you are interested in what's going on in the world of real estate, houses, homes, malls, the thing that we see, understand, that it's easy to explain, probably the easiest to explain investment in the world, then you are in the right place if this is your thing. Now, of course, Money Matters show talks about money, finance, investing, how to make and protect our wealth over the upcoming upheaval that is coming up. Now, today is a very, very important day for a couple different reasons. One, well, we're going to talk about real estate, and it is a beautiful day. But two, if you will remember from yesterday's and day before conversation as well, that today Fed Chair Powell is going to be talking about what the future of the financial system is. Now, all eyes are on Fed and on Jay and what he is going to have to say. Oh, I'm turning into the Dr. Seuss over here. But anyways, so there's going to be a lot of conversation about where the market is heading, what's going on, inflation. Everybody's expecting higher inflation drive, and that is one of the things that he actually did announce, that he is going to let it run hot. Well, what does that mean when it comes to investing in real estate? Because for me, as a real estate investor, that is very exciting news. Now, I know some people are like freaking out and panicking, but for me, that's exciting news. Part of intellectual and intelligent investing, and of course, focusing on your wealth and studying, is to do with ability to, no matter what, be able to do just fine, if not amazingly well, regardless of any economic status or state or where we're heading. Now, of course, it's not always perfect, right? But the cool piece of investing in real estate, if you know what you're doing, is that you could get into real estate for pennies on a dollar. So even if the prices drop, 80%, you still didn't lose any money. How cool is that? Now, second piece is focusing on passive cash flow. Passive cash flow is incredibly important for us to actually start accumulating multiple streams of income, which always beats single stream of income. And of course, there are many, many strategies out there. There are risks, of course, involved with everything. And as always, what we're going to share today in this episode is not financial advice, but it's rather just one random guy's idea of how to do this stuff. Now, before we go into the super awesome, amazing movie that everybody's waiting for, I do want to welcome everybody watching this live only on onedealaway.com/live. Do sign in, do sign up, say hello, and of course, we're going to be doing Q&A at the end of the show. Everybody else watching this on any other channel, including YouTube or anywhere else you might see this, do me a huge favor, smash that like button right now. Do subscribe, hit the bell button so you get notified every single day that we go live, which is, well, every single day. Let's do this. And good morning, happy Thursday to you. Let's get to business. Oh my gosh, I always get excited when we talk about real estate. I always get excited when we talk and when we get to learn about what's going on. And today is going to be an epic day because, I think me and everybody else is expecting some sort of change in financial future for everybody, right? Of the new system that is going to be birthed today. Is that birthed? Birth? Anyways, so I do have quite a bit of news to talk about. As always, we're going to start with mortgage information because, well, most people do finance stuff. And when we talk about mortgage, we're going to be talking about where we are right now, refinance, all these different things. So if you were watching an episode last Thursday, because every Thursday we do real estate overview, then you likely have heard of this new thing that the government is issuing out of the new fee, and they were going to roll it out as of September 1. However, we do have exciting news that this has been postponed to December 1. However, you don't have a whole lot of time. So if you're looking to refinance, because that's, I believe, what it's hitting, don't quote me on that. Do check out the video. It's available on YouTube under Money Matters, and just go and look at real estate playlist because it is going to be right there. All right, so what's happening is that the mortgage rates for August 27th, of course, today is 27th, so there we go. I mean, talk about hot off the press. This puppy was just printed, so we are all aligned. Beautiful thing when that happens. The average for 30-year fixed rate mortgage advanced, but the average on 15-year fixed dropped. Meanwhile, the average rate on 5/1 adjustable rate mortgage ticked downward. All right, so now we're going to actually take a look at what the average is. Now, this is a national average, and it's going to, of course, differ from location to location, and it's going to be largely based on your FICO score, on your credit score. So if your credit score is not all that great, do work on that piece, but don't be shy to give them a call. You'd be actually surprised what they're able to do. I will explain in just a moment. 30-year fixed mortgage is 3.07%, up 4 basis points from a week ago. 15-year fixed is 2.6, down 4 basis points, and 5/1 is 3.36%, falling 1 basis point. Now, it's always interesting to me when I see that the adjustable rate, remember 3.36, is higher than the fixed rate, and in this case scenario it's 0.3% higher. Now, for me, that signals one thing: they don't want you in the adjustable rate, and like you, for a reason that it is potentially going to go even lower, if you can believe it. I mean, seriously, could you have thought that we could go even lower? But we can, and we could, and we likely will. Now, one of the things that I have said is that if you are, don't be shy to give them a call and find out of what's going on and whether you can qualify if you're looking to refinance, because even if you can shave off 1% or 2% off your mortgage, there's a potential that you can actually save on monthly basis in your cash flow, and cash flow is king, as you may know. So one of the things that I wanted to share with you is that I have actually, remember how I've been saying, hold on for it, wait for it, wait for it, wait for it. I did officially, I want to be completely transparent, I did officially put in for a refi for one of the properties. The other one is probably going to be happening in about a month or so. The other one doesn't affect the residential stuff, so it doesn't really, I mean, matters, but it doesn't matter if you understand what I'm saying, because that fee thing that is rolling out in December is going to be affecting residential and not commercial properties. And commercial properties, of course, when we talk about commercial mortgage, that goes also for residential properties that are just 5 units and up. So you will have to go for commercial mortgage on that. Anything that is 4 units and below, you can get residential mortgage. Now, one of the things that you need to understand when it comes to that whole residential mortgage and stuff is that the rules have slightly shifted from what they used to be. And I didn't know that, but I did learn it, so I wanted to share it with you. One of the things that actually is happening right now is that if you are buying a single family residence, meaning it's just one unit, it's just one door. I mean, it could have a back door to but when we talk about the number of doors in investing space, in real estate investing space, we're actually talking number of units, right? Number of apartments or whatever, right? So if you're getting a single family home, meaning it's one door, right? then the 20% is the standard. Now, of course, FHA, VA, and that kind of stuff. There are special programs that exist out there that will allow you here in the United States to invest for to put down way less than 20%. And of course, they're still doing that stuff. You might have to shop around. You might have to pay the private mortgage insurance, which might increase your cost, but your out of pocket costs may be way less. So it is a way. You do want to do the math to understand of what makes more sense for you. Now, a couple of things that you want to understand is that they are offering super low rates. So I did end up going through the refi, and we locked in at well below 3%, and this is absolutely crazy. So the cool piece is that just by me doing that stuff in this year alone, I'm actually shadow making, not making because it's not going to be taxable event, but I have just increased my cash flow for the year about we just calculated yesterday close to $20,000. So that's like getting a part-time gig right out there. Now, of course, this is not for everybody, and I'm not saying it to brag, but I'm just saying to get you to start thinking that if you have been thinking of maybe I should refinance, give them a call and find out, because you might be able. And I know that what's going on right now, right? I mean, I'm watching the news. I mean, I'm not watching the TV news and stuff, but I'm watching the news. I'm watching YouTube all the time. I'm reading the news all the time. I'm seeing what's going on. I'm paying attention when I drive around and talk to people and investigate stuff. And there's this huge panic of like, real estate market will crash, real estate market will crash, it's going down, it's going down. Yes, it is possible. And when we're talking about the crash, it doesn't mean that it's going to implode. It's not a stock market. It doesn't work that way. Just because the price of a home goes down, it doesn't mean that the home goes away. What does mean is that you have greater, potentially greater buying opportunities, meaning you can buy the same house for way less. However, when it comes to refinance and that kind of stuff, that could happen and it might not happen, right? And we are still waiting to see what's going on. But one of the things that I have learned, even in that 2007, 2008, 2009 market crash, is that when everybody turns negative, you want to be positive. When everybody's positive, you want to be negative. You do want to run a bit of contrarian stuff. Now, am I saying go bananas right now with real estate? No, I am not. I don't think you should be going bananas with anything right now, but finding a way where you can actually reduce your expenses, increase your cash flow, have some cash sitting on the sidelines and getting ready for what's about to come in 2021. It's not going to come right now in 2020. And even if it starts rolling out, we're not going to see it. Real estate just simply doesn't move that way, okay? It doesn't move that fast. So fastest we'll see something is going to be 2021, which gives you and I plenty of time to configure a way to increase our cash flow, increase our cash holding, and it doesn't have to be cash, right? I mean, you can go in and hold it in gold or bonds or money market or stocks or crypto, whatever it is that you believe in holding it, right? And having a nice diversified portfolio makes sense. But what I'm saying is you want to actually have some accessible cash to you so that when prices do come down, you can actually go and acquire another property. And so potentially refinancing right now might make sense. Now, of course, we don't know what is going to happen, right, when it comes to interest rates and mortgage rates. And so here is what the prediction is coming from some of the experts right now. 25% of them are saying it's going to go up, 42% are saying stay about the same, and 33% saying it's going to go down. Now, when we're talking about going up, going down, staying about the same, anything that is, within a tenth of a percent, to me, it's about the same. You're not going to see a huge difference in your mortgage, if it's, 2.9 versus 2.85 or 2.8. It just doesn't work that way. Yes, it does make sense, but it might not make sense to risk it and stuff. So I don't know that I would want to wait for too long. And another reason is because of the fee that is being put on hold. So let's take a look at some of the reports about that. So mortgage rates plunge after refinance fees put on hold. I don't know about plunge, but they did go down. Okay. Adverse market fee will now take effect December 1 instead of September 1. We just talked about that. And if you want to grab a low refinance rate, you likely just have to wait a couple of weeks and then fees will start having an effect. Lenders have been raising rates to start compensating for the new surcharge, and on Wednesday, rates on 30-year fixed rate mortgage slid to an average of 2.94. Now, of course, one of the things that they're saying is that the refinance fee has been pushed to the side for a while. Mortgage rates will probably keep going down and may hit even more lows. All other things being equal, meaning if the bond market suffers, it could offset the anticipated benefit. Mortgage rates closely track the interest or yields on Treasury bonds, and the benchmark 10-year Treasury yield has been bouncing higher on promising news about the economy. What we're also looking to see is what's going to happen today with Fed Chair Powell, and he's likely going to be talking about wanting to drive inflation higher, which could have potentially negative, depending how you look at it, effect on the interest rates and the mortgage rates. So we'll see how that works. Also, one of the things to know is that mortgage application to purchase is 33% higher than a year ago, and application to refinance a home loan are down 10% for the week, but are up 34% on year-to-year basis. Now, what this means is that because they're down 10% for the week, you might be able to get the slightly better rate, slightly more competitive rate. And the delay of that December 31, one thing you have to keep in mind is that does take about 60 days or so to close onto the properties, onto the loans. And you want to you don't want to wait for too long, because if it hits within that December 1 date, then it just might be a bit too late for you to go in and play around with that stuff. So one of the things to also know and understand is that they have also changed some rules, that if you do have 2, 3, or 4 units, even though you can get residential loan, right? You can get that. You can get the nice 30 year. You can still get this like 2 point some percent interest, which is insanely low. They are looking for 25% down for that stuff. Now, of course, they will still work within an FHA and that kind of stuff, but it is something for you to understand when it comes to refinancing, right? So if you don't meet the 75% loan to value ratio, you might still have to carry the PMI, the private mortgage insurance. But if your reduction is so deep and so far, then really does it potentially matter? Maybe, maybe not. It just depends on how long you want to hold on to your properties, what your plan is, what your exit strategy is. For me, I plan to hold on to the properties for a very, very long time and just actually add on to portfolio and not necessarily shed it, because for me, I don't want to trigger any taxation whatsoever. I want to figure out ways to actually access cash from the equity, from the properties, without selling it, without going into that stuff. And of course, one of the ways to do that is through debt. Now, you want to be very, very careful when it comes to debt, because if you over leverage and you cannot carry it, then that could be highly problematic. For me, the math just simply made sense to go in and reduce the monthly cost. And the reduction is so high, like I said, that I will actually have, on paper, make way more money in just the last quarter of 2020 than I would if I didn't do anything. So you definitely want to do the math right now, and potentially look to refinance if that's something you want to do. They're being very, very competitive, and they are, I mean, it takes a little while to get them on a phone. I won't lie. You got to be a little bit persistent. But once you get in, they're actually kind of moving, and it does take about 45 to 60 days. So we won't do much of closing or anything for at least another few weeks. 5 weeks, maybe six, I don't know. So it will take a little while, but I did want to share this with you because it is something that is very cool and very important for you to understand that you got to think beyond just the prices. And of course, if the property is cash flowing and you can actually increase that cash flow, that even better, because then you're able to actually accumulate more cash. And like I said, because of what we're expecting to see in the upcoming months and potentially even years, having a little bit of cash, being ready to pounce on to the next opportunity is going to be very important. All right, Cafe Nation. So that's something you want to be aware of. Now, one of the things that you've also likely been seeing, and reports are kind of everywhere, is that the real estate market has been kind of going on up. And so you might be wondering as to why and what's going on. We're not going to go into all of these news, but I will share with you what I have been able to find. Check it out. So here it is, housing market, right? That's all I typed in, housing market. I'm like, what's going on? And millennials power this year's market rebound. Housing market is the hottest trend in the pandemic. And what's going on? Well, people are buying things. Millennials fuel buying housing market. Bigger buildings, new frontiers, things are happening. People are going in. The Toll Brothers saying strong housing market across the board. U.S. housing prices create sellers market. We're actually going to take a look at that story in a moment. But as you can see, there's a lot of positivity. Now, of course, when you go to YouTube, there's a lot of negativity of the market will crash, the market will crash. And you know what? It will come down. Yes, I do expect the prices to come down, all things being equal, but we still don't know what is going to happen. We do know that some of the evictions have started, well, not the proceedings, but the filings have started. Proceedings will likely begin over the upcoming weeks. Foreclosures likely might be coming as well. One of the things that I do feel fairly comfortable saying is that the banks will more likely than not want to actually work with individuals to not try to foreclose if they don't have to. The problem with it is that if they foreclose on everybody and the prices fall, who will come behind, right? So that's part of the piece, and that's the reason why forbearance and that kind of stuff. So while many folks are hitting this 6 month forbearance piece probably as we speak and over the upcoming weeks, there is a likely probability that they will actually allow them to sort of restructure, refinance, change things around, and so the banks and the non-bank lenders within the mortgage industry, in my conversation with a few loan officers, are basically working with individuals and saying, okay, let's talk about this stuff. Let's refinance. So you owe us 6 months worth of rent, and let's say that that's $10,000 cumulative. And people are like, I don't have that kind of money, man. Like that's not gonna happen. So what they're doing is saying, all right, well, let's take a look at the value. Let's take a look at the loan to value ratio. Let's refinance you for another 30 years extended. So you might have come down to 20 or 25 years or 15 or whatever. Let's refinance. Let's extend that. You are sitting now in 4% or 5% interest. Let's reduce that down because we can get you into twos and low threes. And we're going to be able to preserve that stuff. We can roll some of the stuff. Hey, can you come up with the closing cost of $2,000? People will work on it because they do want to keep the home. And next thing you know is that instead of costing them, I don't know, $1,500 a month to hold on to their homes, it might cost them $700. And that is huge. And they will jump on the opportunity. So the bank wins, the person wins. And I think we're going to see a lot of these things kind of try to work themselves out, because banks do understand, hopefully they do understand, that if they crash the market, if all of this stuff crashes, it's going to be super super rough. Now, of course, a lot of things are unknown. We don't know if the stock market will crash. We don't know what Fed Powell is going to talk about today and what the impact that is going to have on the market, both equities as well as bonds, which affects the real estate and the mortgage rates, right? We don't know who's going to win the election and what their stances are going to be. So there's a lot of uncertainty happening right now. But it is something just for us to kind of think about and talk through. I do believe that many of them will work through stuff because, like I said, I've been speaking with many, many loan officers. The other piece that also we've been talking about on this show, and that is still very much the truth, is that many of these banks and lenders are also allowing their employees to work from home, and many of the companies are extending that well into the January. And you know what? I have hard time seeing that they will do much of any changes once January rolls out, because they will notice that things are working just fine. So it's like stay. And one of the reasons that one of the mortgage originators that I have talked to, they do have offices in LA. Their monthly bill is $1 million, and because they have such a large production, and they're basically saying, that is expiring at the end of September. We're not renewing. We're not renewing. We're not doing it. That is going to boost their profitability on up. So everybody's starting to play the game of more house for less money, right? And so that's why we're seeing this mass exodus from major cities. They're going into more affordable areas. They're leveraging on this low rates, without the fees and that kind of stuff. So people are being fairly smart about stuff. Now, the bidding war and that kind of stuff, I don't know that that's really smart, but sometimes you got to do what you got to do. I'm not judging. I'm just saying that's not something that I like to do. And that's a little bit too scary and bubblicious for me. So I keep staying in the game, keep watching so that I don't have to do that piece, right? So I look at what nobody else is looking at and try to find a diamond in the rough. And so far, knock on wood, that has actually served me rather well. And it is something that I do recommend to my family, friends, associates, and students. So there you go. I share that strategy with you as well. But people are going out there. They're actually putting money in it. They're remodeling their homes. They're adding back offices. And I thought I pulled it up, but now I can't find it to save my life. Let me see if I can find it. Yes, I can find it. I did pull it up. So one of the things that I have actually found. Check this out. So the office is that get yourself a backyard shelf. Sorry, shed, not shelf. Shed. You could put shelves in it, I guess, if you want to. So what we're seeing is that these little microstructures are starting to pop up everywhere. And of course, as long as you don't need a permit for anything under 200 or 250 square feet, check your local laws. People are starting to install these sort of like cool new sheds with the doors and windows and that kind of stuff, reworking them into the offices, doing the same things with their garages and that kind of stuff. And that is very, very, very cool, in my personal opinion. And we've been hearing that these folks that are doing this stuff are have been seeing a lot of interest over the past few years. And then since the beer overflow thing ended, it just exploded. They don't have enough time and people to do this stuff, so they're like, oh my gosh, like they're rushing. Same thing is happening with micro dwelling units, so the tiny homes, that kind of stuff. That has been exploding, as well as those folks that manufacture that stuff are starting to run out of people. And people are looking for this, so they're saying this will cost you anywhere between like 15, 16,000 up to about 20, 30,000 to install, put everything else in and stuff. So you can get fairly creative. I believe that there's some stuff that is even on Amazon is selling kits. Well, they will ship it for you. And if you're a little bit handy and you know what you're doing, or you are not afraid of hiring a handyman to kind of come and help you out, and you have space in a backyard, this could be a great way to A, get extra space in your home, B, boost the value of your property by quite a bit, C, add on some more stuff into it. So that's kind of what we're seeing now. Another piece is that people are saying, talking about the real estate market crashing and stuff. We know that people are leaving major cities, and we know that they're going into suburbs. We know that they are looking for cheaper places to live, because if say one bedroom, one bathroom, apartment that is 750 square feet in Manhattan will cost me, $5,000, right? I don't know if that's what it is, but it's definitely going to be more than three. But let's say it's $5,000, and I can then go and find a two-bedroom, one-bathroom apartment or condo or house with a backyard and a garage and space for me to put the fancy schmancy office for $10,000, and it's going to cost me $1,200. Why wouldn't I do it? I'd be silly. I'd be silly not to do it, especially now that my employer doesn't expect me to be in the office all the time. I can do it from the comfort of my home or my coolest new back office that I just got, right? And so that's what's happening. Now, movers are, busy. Check this out. Check this article out. Movers in New York City are so busy, they're actually turning people away. So people are moving. It's not necessarily that things are going horrible. It's just that people are being smart about their money and saying, "Wait a minute, do I really need to live off of Park Avenue, or can I live somewhere else and we can just commute to the city?" And by the way, cities seeing all of these like uprising and riots and stuff, and we talked about this stuff. We've been seeing the news about it. So people are opting to leave out and saying, "Forget it, man. I'm not interested in that stuff." City living is not what it used to be. Now, is it going to come back? Probably. It's just not going to happen right now. And so people are like, "I don't want to live through it. I don't want to suffer through it." And so I am out. I'm not interested in it. The other piece that is kind of interesting to see is that I told you about the we're going to share about this article. U.S. housing prices create sellers market. Well, of course, we knew that. House prices were up 5.4% year over year in the second quarter of 2020. Home prices increased in all 50 states and DC, and they're rising for 36 quarters, straight quarters. So that's a little bit unnerving, but I do understand why. Right? All of this money that's been printed has to go somewhere. So it's going to go into assets. And some people will put it into equities, some people will put it into real estate, and many folks are going in and putting it into real estate. So, not a very long article, but it was an important article. Now, I did want to share with you very cool thing that I also found today, and that is the fastest growing large cities. So here we go. I don't know if you can see this. Let me see if I can zoom in, and maybe it's going to make it better. All right, maybe it's not as pretty, but at least you can see it. So, fastest growing large cities, you will see a lot of Texas. A lot of Texas, a lot of stuff in the south, some stuff in the west. So what are we seeing? All right. So we're seeing Texas, 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 Texas. We do see some Arizona, Buckeye, Arizona, Goodyear, Arizona, South Carolina, Florida, a lot of Texas, a little bit of Idaho, Utah. Um, what else do we see? Irvine, California. Interesting. I think folks are just trying to get out of LA, but stay close to LA. So Irvine, California makes sense to me. Goodyear, Arizona, and Buckeye, Arizona are basically kind of like suburbs of Phoenix. So again, makes a lot of sense. Meridian, Idaho, I don't know where that is, but I'm going to guess it's a suburb because looking at some of these things, even with Texas, like Cedar Park, Fort Myers, that kind of stuff, that's all kind of like suburbs of stuff. Murfreesboro, Tennessee is a college town, Franklin, Tennessee. So you can see where folks are moving, and you can see by percent change. Now, this is, of course, what's been happening over the past 20-ish years, 10-ish years or so. So you want to definitely pay attention to the date up here. You see that? Let me move on up so that you can see this. So this is not what's happening right now. Remember, data in real estate lags, and it lags quite a bit because you got to collect that puppy and then roll it out. Now, one of the pieces that we're also seeing is that the materials are starting, construction materials are starting to go up. So I've been very, very busy, as I have been telling you, super busy, working on refinance, doing some construction work, acquiring stuff, doing this, building the business, learning how to code, like super busy. but it's been amazing and exhilarating. One of the things that I am actually doing is I do have some construction projects happening, right? So I am doing everything that everybody else. Now, these construction projects were scheduled for this year anyways. They were just delayed thanks to the beer overflow and inability to get folks to come in and do stuff. But we've been doing some construction. We're going to be continuing to do some construction stuff, expanding, improving, that kind of stuff. So it's always, I'm always working on that stuff and have been heavily working on that stuff. But one of the things that I noticed is that the prices have gone up of lumber. And not only that, it's really hard to get it. So when you're trying to make order, for especially larger order because of the construction stuff, right? You don't need one 2x4. You need many 2x4s, and you need plywood, and you need this, and you need this, and you need this. What I have been seeing is that, as I'm putting orders, I'm like, all right, do you have, I need 2x6s, and I need 8 feet because I don't need them longer, right? And they were like, we don't have any 8 feet. I'm like, do you have 10 feet, 12 feet? Like, what do you have? I'll take whatever you have, right? So, then we go into, I say plywood. I'm like, all right, I need ply. This is what I need. Oh, we don't have that. Okay, do you have this? We don't have that. Okay, what do you have? Like, tell me what you have and I'll work around with you. So it's been very interesting when I ask, when do you expect to get stuff? People just don't know. It's been very uncertain. So here is what's happening within the construction component of the real estate, because that too is very important. U.S. lumber prices reach record high. So they're rising all over United States, and part of what's fueling the rise is increased demand resulting from a boom in small-scale residential commercial projects that are adapting spaces to physical distancing demands, right? We just talked about that stuff. Improving things. Homeowners are building decks, outdoor spaces, restaurants and hospitality spaces are building spaces for outdoor seating. Low mortgage rates are fueling larger construction projects and new home building. They're also fueling ability to be able to say, hey, I got to do all these things. So anyways, and it's been sort of like a pent-up demand, right? And everybody's coming in. Now, another piece that also is happening, not just this within the U.S., but also is happening is that, remember that the supply chain has sort of like died for a little while, and it's not been happening. So of course that too has put a strain on it, so that not only is the local lumber yards struggling with stuff, but they were also not able to produce and stuff. So everybody's trying to kind of play a catch up. And so while we had supply and demand shrinking, now we're having demand increasing, but supply cannot keep pace with it. And when that happens, prices go up. A glut of previously postponed projects are eating up timber supplies faster than mills could have anticipated, and larger ones that are importing it from other countries are having a hard time because those mills too are struggling as well. Overall, construction costs had been falling, interestingly enough, but an increase in crude petroleum costs raised material costs, and not enough to counteract the falling cost of labor. So that's where the construction costs are coming down. And of course, we have another one that says construction costs falls as materials prices continue to rise. And this is, this was in July, but it is still a very much accurate statement. Construction jobs return to states that have eased restrictions on non-essential products. Remember, many of them were not even able to go out and do anything that was not essential. So right now that they're starting, they're trying to kind of keep up and do things, and they're taking jobs left, right, and sideways. And I will tell you right now, trying to get a builder, trying to get general contractor, it's always been tough. Good luck now. They are backed up, super backed up. And so what I have found that works, in case you find yourself there, is compete on the price. And I'm not saying compete on the price down, compete on the price up, and basically see if they can fit you in. Nights, weekends, early mornings, like, I'm flexible. Let's go. Let's do this stuff, and I will give you premium for your job. So if you need to get stuff done, you might have to do something like that. Construction costs have been reportedly falling for the first time since 2010, but according to Associate Builders and Contractors, ABC, raw material costs rose by 2.2% in June, and they're going up since then as well. Part of this stems from the ongoing battering in the global supply chain, right? We just talked about that stuff. With no end in sight on the pandemic or international tension running hot, material costs will continue to rise for the foreseeable future. Material costs are on the whole 3.4% lower than they were in June 2019. You got to keep that in mind, but they are going up. And if they surpass things, what that may mean is that the new projects that are coming on are going to be way costlier and way more expensive. Now, what does that mean for home builders? Well, they will have to kind of try to compete, and they're getting squeezed from both ends because the owner or the potential homeowner looking to buy stuff is going to go and look at the existing inventory of what's out there versus new and say, you know what, I'm gonna buy the existing and just do some remodeling as opposed to spending the top dollar to get what you are offering here with the new build. So the building companies could potentially experience some squeeze. Not only will they have to kind of keep their prices down to keep up with everybody, not like down, prices are going up, but you understand what I'm saying. They can't raise prices as much, even though the cost of the materials is going on up. And then, of course, the labor costs are, going to kind of go down, which I have been calling for a little while as well. But they can't go down super, super low because then people won't work. So you kind of have to play this like, magical balancing act thing. Um, the Turner Building Cost Index, which tracks cost of the non-residential U.S. construction market, declined for the first time in 10 years. So this is an interesting piece, which also might explain why I am seeing some of the larger projects starting to pop up in my area. All right, so now to kind of finish it off, I kind of like doing these things. Is hottest zips in America 2020 edition. We talked about one version of it. Here's another one where you will see some of the same things. Colorado Springs, Colorado. We didn't talk about that. We talked about Denver. They're saying, hey, Colorado Springs is even better. Topeka, Kansas. Reynoldsburg, Ohio, Springfield, Virginia, Raleigh, North Carolina. We talked about Raleigh before. Melrose, Massachusetts. I think we talked about it. Worcester, Massachusetts. We did talk about it. Rochester, New York. We talked about it. South Portland, Maine. We didn't talk about that, but interesting enough. Hudson, New Hampshire. We didn't talk about it, but that is one. And here, right here, you actually get to see the red hot real estate. 10 homes for sale in the nation's hottest zip codes. And they actually have a very cool, here is a Colorado Springs, for a cool $850,000. This too can be yours. It is beautiful. Reynoldsburg, Ohio for $275,000. This puppy is yours. Rochester, New York, $92,500. Here you go. How beautiful is that? I mean, the prices range drastically. Melrose, Massachusetts for $515,000. Here you go. This is what you can get. South Portland, Maine for just $300,000. Here you go. Beautiful home. Could use a little bit of TLC, but not too bad. Topeka, Kansas for $230,000. Here you go. You get this beauty right over here. Again, could use some TLC. Hudson, New Hampshire for $650,000. This is what you get. Look at this thing. Right. Worcester, Massachusetts for $576,000. Here is the house. Springfield, Virginia, $675,000. This is the home that you will get. And number 10, Raleigh, North Carolina, $365,000. This is the house that you will get. Hold on. Oh no. It kind of, it kind of bumped up. I'm sorry about that. Nothing I can do about it. All right, so that is kind of cool. And the final piece that I found for some of you who are more adventurous like me and looking for like far, far away, here are some islands you can buy without having to be a billionaire. Are you ready? So here we go. Yet affordable. 9 private islands priced below $400,000. All right, some of them come with structures, it looks like. Some of them not so much. Oh, this looks lovely, doesn't it? Look at this. Beautiful. Let's take a look. What do they have? So here we go. In Melbourne, Florida, you will get a spatial coast bungalow for $399,900. Now, of course, I don't know much about it, but of course, it's just kind of cool. Look at this over here. Bachelor's Island. Ooh, maybe I should move there. Hackers Island, North Carolina, 399.9. All right, it seems like all of them at 399, and it comes. There's like a 4 acre land. There's Cape Lookout, all kinds of stuff right there on the water. Well, it's an island, of course, it's going to be on the water. Now, duh. All right, Friendship, Maine, $385,000. You get this two-bedroom cottage perched on top of some rocks. I don't know if it comes with the boat, but it's definitely a boat in only. Webster, Massachusetts, 359,000. Cobble Island Bungalow. So there you go. That's another one. 526 Lake Road, Pine Plains, New York, for just under $300. You get this. It's a 3 acre island and includes one bedroom house surrounded by tall oak trees. Let's see. Ellie, Minnesota, 275,000. It is 2.5 acres, surrounded by crystal clear water. Two-bedroom log cabin built in 2001. Greenville, Maine, 275, and it's a 1.5 acre island, tiny island. And it's basically comprises of two separate islands, and the larger one has a one-bedroom cabin built in 69. Finally, Tower, Minnesota, 398,500, and it's one of the largest islands of the list. It sits on Lake Vermilion, spans more than 5 acres. Look how pretty this is. It includes a vintage boathouse, a guest cabin, and two-bedroom main cabin. And there you go. This is what you get. Oh, no, we do have one more. Yeah. How could I miss it? Drummond Island, Michigan, 239,000. And let's see, what does it come with? Bridge or boats. Ooh, I like that. And it's located near the Canadian border on Lake Huron. Two-bedroom home. And there you go. This is what it looks like. So, very, very cool. As you can see, there's plenty out there in real estate if you're interested and not afraid to look for it. I appreciate you watching. If you have learned anything new, do me a huge favor. Smash that like button if you're watching on YouTube. For everybody watching this live, we're about to go into Q&A, so get your Q's and A's and discussion ready. For everybody watching remotely, thank you for watching. I appreciate you. Smash the like, smash the subscribe, smash the bell, and I will see you tomorrow when we're going to discuss deeply about what Fed Chair Powell had to say. And of course, we're going to talk about some of the very, very important news when it comes to the biggest new asset class that is being developed, and that is, of course, cryptocurrencies and blockchain. Thanks for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away.